Welcome to Macro Monday on Investec Focus Radio SA, a podcast about what's driving global and local markets. I'm Chris Holdsworth, Chief Investment Strategist at Investec Wealth and Investment. Every Monday morning, I'll update you on key developments from the past week and what you need to know about the week ahead. If you'd prefer to watch a video with the graphs and charts I referred to in the podcast, just go to investec.com/Macro Monday.
This week, we'll be looking at the latest developments in Iran. We'll be looking at inflation outcomes in both the US and Europe. And then we'll finally conclude looking at what to expect from the respective central banks from the US and Europe. We'll also be looking at some positive signals that came out of the latest land transport survey by Stats South Africa, which shows that rail performance is improving and is well off the trough levels that were experienced in 2023. Last week, President Donald Trump announced a 2-week ceasefire in Iran for some peace talks to begin between the US and Iran. On the back of that, we saw a steady decline in oil prices, both from a Brent crude perspective and a WTI oil perspective. Quick resolution to the conflict is expected to be supportive of a greater decline in oil prices and better global energy market dynamics going forward. However, towards the tail end of the week, then there was an announcement that the US will blockade the Strait of Hormuz. Oil markets have immediately responded to that news, and we have seen oil prices, which had briefly gone towards $90 a barrel, we have now seen those again up reaching that $100 a barrel level. This is broadly negative for the inflation outlook more broadly for the US and global inflation dynamics. As we have highlighted before, inflation in the US was rising ahead of the conflict. The latest data has shown a significant surge in US consumer inflation, and at this point in time, given that you had a month-on-month reading of 0.9%, then this does suggest that it will be a slow road for US inflation to begin a trend back towards that 2% level. In fact, month-on-month inflation will have to be consistently negative over the coming months for inflation in the US to reach 2% within the next 6 months. This was broadly negative for monetary policy setting. In fact, if you look at Bloomberg's natural language processing sentiment analysis for the US Fed, we can see that the US Fed commentary has been increasingly hawkish, and typically US Fed sentiment as a leading indicator of the direction of a monetary policy. So this does suggest that there are some risks for the US Fed to start hiking rates. At this time, the market is not expecting a definitive hiking cycle. If we look at forward rate agreements, then what they'll show is that at least over the next few months, US rates are expected to remain flat.
We hope you're finding this podcast valuable. If you are, please take a moment to rate Investec Focus Radio SA on your podcast platform. And to make sure you don't miss an episode, please remember to follow us.
The story is not materially different in Europe. We had Europe inflation data out last week, which also showed a surge relative to the previous month. Like the US Fed, the ECB's commentary has also been increasingly hawkish over the last few months. This again is broadly indicative of the risks surrounding a potential hiking cycle for the ECB. When looking at the market at this point in time, the ECB is expected to hike rates twice by 25 basis points this year. Last week, we had PMI readings for a variety of countries, and the significance of the PMI readings is that we saw, from a month-on-month perspective, a decline in PMI readings. Although most of the economies that we track had PMI readings that are still in expansionary territory, the key significance is that they are on that downward trend. If that downward trend continues to persist, then we would expect global growth to slow. We've seen a strong correlation historically between PMI readings and global growth. Looking at consensus forecasts for global growth, those remain relatively unchanged relative to the beginning of the year. We saw some upward revisions to growth at the start of the year, but since the US-Iran conflict, then we have seen some downward revisions to those growth forecasts. It is something we'll continue to monitor closely to give us a sense of where the global economy will finally settle for the year. Of course, the US-Iran conflict presents significant risks from an inflation perspective and from a global growth perspective. Switching over into South Africa, we had encouraging land survey data coming out recently from Stats SA. Looking at that within our overall SOE performance index, then it does show that our SOE performance index is still tracking at multi-year highs. But importantly, we have seen from a rail perspective that there has been continued improvement and rail performance looks set to reach a multi-year high if the current trend continues. The SA SOE performance index is amongst the many reasons why we remain constructive on the South Africa growth outlook. That said, the war in Iran does present some short-term headwinds for the SA outlook. For example, we saw the significant rise in petrol prices. That is expected to be a negative impact on consumers and consumer spending in general. Monetary policy dynamics will also be key in us getting an overall sense of how the SA economy may perform this year, given the risk that we are experiencing around the inflation outlook. And that is where we're going to leave it.
That's all for this episode. Do tune in next week for more investment insights from me, Chris Holdsworth, and the Investec Wealth and Investment team. If you haven't yet added us to your podcast feed, you can subscribe to Investec Focus Radio SA wherever you listen. And please take a minute to rate our podcast so we can surface this content to the broader investment community. If you want to see the graphs that are referenced in the podcast, you can watch a video version of this recording at investec.com/Macro Monday.
The views expressed are those of the contributors at the time of publication and do not necessarily represent the views of Investec Wealth and Investment International and should not be taken as advice, guidance, or recommendation. Investec Wealth and Investment International, a member of the JSE Equity, Equity Derivatives, Currency Derivatives, Bond Derivatives, and Interest Rate Derivatives markets, an authorized financial services provider and a registered credit provider.